everybody. Thanks a lot for joining me as at this Thursday afternoon market recap. I'm going to point out the obvious when it comes to the three US market indices. We'll then take a look at a couple of stocks that have been, shaking off some of the most recent bearishness, you could say, at least to begin, at least the first half of the past 2 weeks. And that will really round us out as at this afternoon market recap. Interesting class ahead planned for Saturday, obviously. If you're not in that pro analysis class, I encourage you to do so because I do believe right here, right now, we are at a critical turning point, a critical juncture whereby, again, I believe the majority of market participants are going to be a little bit gobsmacked, a little bit dismayed, in the event that this market continues to push to the upside. Now, the good news is that we have closed all of the open gaps. This now extends to that of the S&P 500. Let me just rewind a little bit because last time I spoke to you, we were really referencing that of the NASDAQ and also that of the Dow Jones Industrial Average. You can see here, this is Monday's candlestick and this is Tuesday's candlestick. First of all, we were expecting the markets to come on back down and to close this open window, which was between Thursday and that of Friday last week. All right, so we did that very early on in the week. And in the process of actually closing this first gap over here, we opened up a secondary gap between Monday and Tuesday of this week. Now, yesterday on the NASDAQ, we came on into this area and we tried to close it with this upper wick. We didn't completely do so. However, fast forward to today's session, you can see that with this upper wick, during Thursday's session on the NASDAQ, closing up again around 44, I believe, or 47 points. I am just streaming through the end of data now. But you can see that we have now definitively closed all of the open windows. This extends obviously all the way back to the beginning of September, whereby we had this little open gap over here, which we closed towards the back end of September. And this is what we've been sort of hoping for, or at least waiting for the markets to actually fill and close all of their open windows to essentially allow the dust to settle. And then what we've been waiting for is a little bit of a stealth bull rally to begin. Now, there's a very good chance that with this candlestick here, now that the gap has also, or at least extended to that of the NASDAQ has closed, and we're going to touch on the Dow and the S&P, there's a good chance that this is going to be the foundation, the beginning of it, upon which if we do not see, any continual gaps, that this is going to mark the beginning of what is going to be the rally to take out these swing highs just here. If you flick on over and have a look at the oscillators, you can see that they are supporting this move off from this most recent higher low relative to where we were in the month of August. And you're starting to see the candlesticks themselves, although they are, or they have been at least, starting a little bit weak each session, you can see this bid coming into the market whereby the markets themselves, not only in the second half of the week, but really towards the back end of each trading session, are actually continuing to close strong. So I think this is a little bit of a precursor, a little bit of the hint of the market itself, giving you a very subtle nudge that, again, this might be a very critical juncture, at least that's what I'm looking at it as, upon which where this bull little stealth continuation may begin from. All right, when I extend this over to the Dow Jones Industrial Average, again, we closed not only the candle, or at least the open window between Thursday and Friday of last week, if I can just mark it on my chart. All right, we've also obviously closed this window here. We had a very slight gap just here, which has also been filled. So again, the Dow Jones Industrial Average is back in alignment with that of the NASDAQ. There are similarities, between the two markets, or between all three of the markets. And as such, again, another bullish candlestick here, up 150 points. Again, we haven't critically moved above that of the intra-session high on Monday, but I do believe it's coming. And again, just to mark it in terms of the structure of the market itself, we're still printing a series of higher lows, even if you go all the way back to 2019. Now, I understand a lot of people are critically calling this the first subsequent lower high. And yes, technically that is correct at this particular time. However, what they are not really taking into consideration is the fact that a trend is assumed to be in effect until it gives us those definitive signals that it has reversed. And that definitive signal in and of itself is going to be a close and a continuation below that of the August lows, which these markets factually still haven't done. In fact, when we've tried to push on down to these areas, number one, we've been calling for hammer reversal candlesticks. That's exactly what we're seeing. And we're also seeing the continuation of these lower wicks as well. So again, the markets have really been sort of hit with a plethora of bad news, you could say. But at the same time, ask yourself the question, are they pushing below that of the August low? And obviously the answer to that question collectively across all three of these market indices, factually, is no, they are not, and no, they haven't. And they don't look also to be doing so in the near future. Again, this may be that critical turning point that we've been waiting for. We've been calling for the reversal, this little pullback, this correction back down to present that high low. We're seeing, of course, the reversal candlesticks to the upside. We're closing all of the gaps. We've come on back down. We've closed this most recent bullish gap, the transition of Thursday and Friday last week. And now we're starting to see a little bit of a bid re-enter the market. So again, I think the market itself is giving us a bunch of clues for people who are wanting to be, or who are at least observant. And as such, it's staring at you in the face right now. This is the final market here. Now, this was a little bit of the outlier, wasn't it? This was the S&P 500 because again, first of all, we initiated the gap over here to the downside, right? We saw the reversal candlestick again show up at this support area, which is technically still a higher low. We got the original rally out between Thursday and Friday of last week, establishing that of the open support. We spoke about this over last weekend or in last weekend's pro analysis class. We've come on back down. We've closed the gap as expected. But since this candlestick here, and this is going back to Tuesday's candlestick again, the first half of the week just gone, relatively bearish, so to speak. However, we have been expecting it. Since then, Wednesday and Thursday, we're starting to see number one, no gaps. That should read number one. No gaps to the upside, which is fantastic. What that means is we don't have to actually claw back or give back any of the gains that we have made like we did last week when we actually closed relatively strong to round out the week after what was that of a relatively weak first half of the week. Again, sort of it's replaying itself. And what that means is, again, we've jumped through all of the hoops. The markets, have gone through all of their sort of technical requirements to allow themselves to now, over time, if volatility continues to be sort of sucked out of the market, whereby we don't see these opening gaps, whereby you're going to see, again, the uptick in the market to higher prices. You can see not to pay attention to that of the exponentials, but if you pay attention to the oscillators, this is what I was meaning to bring up. Again, you can see all of these beginning to turn positive. The Stokes is turning up. The RSI is getting back to that neutral point of 50. But again, what you need to pay attention to right here is the MACD, because the MACD is giving you all sorts of hints, right? The histogram itself, or the bars themselves, they represent the distance between the fast and the slow line, okay, or the trigger signal here. On the MACD, and you can see that we are decelerating, right, back towards the neutral point, which is telling us the momentum of this bearish move is essentially over, or at least it certainly is sort of weakening. And it's starting to flick positive. Now, again, the MACD is always going to lag. It's going to lag firstly the RSI, and the Stokes is going to then lag that of the RSI. But this is really critical. It's very important that you understand this because, again, I see a lot of sentiment, or at least a lot of articles or a lot of pundits talking about the market. And even a lot of sort of traders who consider themselves to be professional traders actually going short on this lower high here. And my opinion is that these traders, or these people and the people who are listening to them, are going to have to unwind, right, a lot of those open positions as the market continues to move against them. So again, I understand it has been a process. It's been a very lengthy process. It's really tested my personal patience, and I'm sure it has also tested yours. At times, it has been a little bit frustrating, but as these gaps have opened and as the structure of the market continues to reveal itself, we've been moving really in lockstep with the market quite accurately, if I may say so. We're starting to see, again, the continuation of these white candlesticks. The market's up roughly 0.5% across the board today. And again, I'm telling you that there's no gaps that need to be closed. There's nothing actually saying that the market needs to at least even come on back down to the support area. Essentially, we've got clean skies, all right, above us. And it's only a matter of time until the markets start to, of course, tread towards or move towards the path of least resistance. And contrary to public opinion at this particular time, all right, that is actually to the upside. All right, that's what the chart is telling us. The path of least resistance still remains to the upside, even though we have been stuck in the mud for a number of months. This is all moving towards that of the, if I can bring it up on my chart right here, the ADX and the CCI, right, firming up after the reset. The ADX still needs to do it, but the CCI, it has recalibrated. If you look at these other markets, as the markets push, you're going to see the CCI again move up. You're going to see the ADX turn down, and this is going to become a coiling pattern, or what you could call an ascending triangle. Depends how you want to break it down. But again, what will generally happen is that you're going to see a resolution to this price action through that of chart application to the upside. And that's the exciting part of it. So again, if you've been continuing, right, to develop and accumulate that of SPY positions, I know it's been hard sometimes. It's probably been churning your stomach a little bit from time to time. But the good news is that there's a fair chance that the volatility itself and these gaps, okay, are done for. And we might actually move into a little bit of a period of calm, which these markets are really sort of in need for. It has been a very volatile 2019. We started off very quick out of the gates. If I can zoom out and show you this, just as a reminder to all the bears out there who are still calling this some form of a macro topping pattern. To me, it doesn't look like that whatsoever, even if you take into consideration the high largely back in January of 2000, pardon me as I lose my voice, 2018. And as such, the market to date is up this year, calendar year anyway, up close to 20% depending on the market that you're looking at. All right. So again, there's no reason to be bearish on this market. We still have adequate gas in the tank of this market to move higher. We have adequate time as well, based on a few key metrics that we're looking at. Not to mention, of course, what is most important to us, which is the technical picture, which still assumes that prices are going to rise over time. I haven't sort of moved away from that analysis. There's no need to move away from that analysis, but at the same time, the market itself can move very, very slowly at times. But the good news is that we've understood that slow period. We've sort of welcomed out of the slow period. And as I say that, we're just continuing, right, to develop positions or accumulate positions, especially on the SPYs when it comes to market indices. Now, obviously, we're moving into earnings. That's fine. I just wanted to show you a couple of stocks. Apple, again, is on the precipice of breaking out above 230.59. This is a stock whereby at the beginning of the year, if I should go back and show you this, right, Apple was all the way down here at about $140 a share, $142.80. We're up here at $230. Okay, we're above all of the trend lines. We're above all of the three key exponential moving averages. We're above the simple moving averages. And here we are, again, on the precipice of breaking out. Coincidentally, the NASDAQ is still a little bit below its all-time highs, obviously. It still has to claw back, right? Some of those original sort of losses that we had entered during the correction. That's fine. But once some of these large tech companies get moving and once they do definitively break out above their resistance areas, it's really going to be fuel to the fire for the indices, of course, or what will help anyway, the indices get dragged up on above those resistance areas that we've struggled to overcome, going all the way back to 2018. Now, another good example of this is Microsoft. You can see Microsoft here. It's been sort of stuck in the mud for 3.5 months. Again, if you think of this through the guise or through the eyes of that of a Bollinger Band squeeze, you can see simply that we're just treading water. And once these markets begin to move, okay, these stocks are going to drag the markets up with them. Or what I should say is that when these stocks do definitively break out, okay, when you see the bears give up and when you say, look, or when the buyers just get that sort of angry about the period of sort of this slowdown we've been stuck in, you're going to see the dynamic and the sentiment of the market shift very, very quickly. We're front running that sentiment shift, okay? We're still largely, I would say, in the minority, which is fine, which is good. We're not concerned. We're not hesitant. All right. We're not fearful. We're just appreciating the market for what it's doing at the moment and as it has been doing for forever, really. And as such, we're positioned very nicely for when this market does choose to break. Okay. I wish I could speed up the process. I simply cannot. All we can do is just watch the market and wait for that moment to come. Now, we've been speaking about Netflix waking up. Potentially, this is that sort of symptom of Netflix waking up close to $13 during today's session. Still hasn't triggered above our 284 reversal, but again, we've been speaking about the positive divergence forming on that of the oscillators. And again, what this means is that we're towards the exhaustion of this bearish push that we've been in for a number of months now. I still think that Netflix is going to come all the way up to $361 per share. When it gets up to this area, look, 100% will become neutral again, but as it stands, this gap, it should close. And even if this stock is to go ultimately to zero, not that I mean that sort of, strictly speaking, but if we are in that of a sort of a major sort of bearish sort of macro theme of Netflix now, before we can really enter into that, right, long-term, sustainably, this stock still needs to come up to 361 to close its open window, and then it's a free-for-all if it chooses to roll over. Okay, so there's a couple of stocks that are of interest to us. We had a lot of sort of trades positioned over the weekend just gone. The markets themselves, just to sort of bring this back full circle, if I bring out or at least zoom out into a weekly chart, obviously last week it was full of volatility, but at the same time there were sort of pseudo hammer candlesticks and they were setting up the basis for what we were calling that of a bull flag. Now, number one, we haven't broken out of the bull flag. If I can just picture this, again, this is on a weekly chart, so don't be sort of scratching your head if you're saying it doesn't look like my daily chart. This is, again, representative of weeks in terms of candlestick analysis. But you can see, again, even with the slowdown that we have had this week, it has still been a little bit volatile. You can see, again, this long lower wick that is still yet to penetrate that of the most recent lows or the macro lows over here in the period of August. Okay, and as such, when you think about it, Monday through Thursday is bearish as what the markets have been with all of the bearish activity in headline news. We're only down 13 points on the S&P 500, and we are still pseudo left with an inside week sort of spinning top candlestick. When I show you this on the Dow Jones Industrial Average, as at the close today, you've got a perfect doji candlestick down 77 points on the Dow Jones Industrial Average, which is priced at 26,000, pretty much 26,500 points. So again, the bears have had every opportunity and then some to sell this market off below the lows. The reality is it's just not occurring. And then once this dynamic shifts, it's going to be like a pressure valve which is released, and you're going to see the market move into absolute crazy territory. I'm telling you it's coming, all right? I cannot definitively tell you when it is coming, but what I'm trying to show you is that in the face of all this pessimistic sentiment, right? Okay, the markets are just not reacting all that much to the downside. Here's the final chart, the weekly chart of the NASDAQ, down 34 points, Monday through Thursday. Another doji candlestick, pretty much a pseudo-spinning top within that of the previous week's volatility of the upper and lower wick, not the real body, but the volatility of itself. And again, it's just more so that of a resting week whereby, again, it had every chance to continue once it did overshoot the gap. Ask yourself the question, has it overshot the gap and continued? The answer to that question is no, it hasn't. Did it do it during this opportunity over here earlier in the period of October? No, it didn't. Has it done it on the 3 or 4 attempts during the period of August? No, it hasn't. Have the markets produced a lower low? No, they haven't. Are the oscillators turning up, representing that of a bid at technical support? Yes, they are. Is this the traditional, blending of traditional resistance turn new support with gap theory, which is making sense and moving into alignment? I'd say yes, it is. All right, these are just facts, right? Looking at the market, and as I sit down and sort of recap this when the time is needed. So again, to sort of conclude this Thursday afternoon market recap, what I will say is that we are at a very important sort of juncture or a critical location on the chart itself, both in regard to price and also time. Do not be surprised if we do not see a continuation of open windows to begin, or what has been the theme of the markets over the past number of weeks. Do not be surprised to see this market stealthily move higher without gaps moving forward. And if you begin to see this is what we're championing for. Ever since we've closed these gaps down here, that is going to be the final indication that the market is giving you, for anyone out there who's positioned long or short, right, to rethink their original positions, their net exposure, and to turn it into the right direction to take advantage of what I think is going to be still a very strong last quarter of 2019 and certainly further into 2020, right? Time is ticking away, but as it stands, all of the traders who, again, still positioned short, you're operating on borrowed time right now, okay, as you have been for the entirety of 2019. In terms of consolidation and accumulation prior to public participation, okay, of the markets moving higher, you're right at that sweet spot right now. Okay, so we're going to follow this, obviously, as at the close on Friday, and then we'll have the conversation in 2 days' time when we sit down and go through the recap of what has happened over the past 5 sessions in more detail, but more importantly, what to expect into the week upcoming, and obviously as we move further into earnings season as well. All right, so I'm going to leave it as that, as at Thursday. Okay, have a good evening, everybody. And I look forward to seeing, hopefully, a few new people in this weekend's class as well. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Farewell.